All right, this is DayTraderRockStar here, and I'm here to talk to you about a little about relative strength trading, how to get into an early morning position or a position um, using relative strength as a tool. And we're going to start off by saying there's really two basic ways of trading the market. You could pretty much follow the trend of the market, buy stocks as the market goes up, and follow those stocks up, or you can actually trade relative strength in a way where the market's going one way and you're buying stocks that are proving strength or the opposite effect of the market, basically. So what I love to trade is relative strength. So if the market's pulling back, I look for stocks that are actually holding against a trend, either holding more better support level, more technical support levels, holding maybe the 20-period moving average where the overall market's lost to 50, or we'll be holding higher highs and higher lows, while the market might be making lower lows and lower highs. So the trend is starting to change. But one of the favorite ones I do is just a visual scan. That's what I'm going to discuss today on how to do a visual scan of the markets and basically pick up some relative strength plays um, and setups and how to get into them. So again, actually this is a good addition to the watch list because I find that this week coming up, there's going to be a lot of turbulent news out there, and the market's looking here with the stochastics turning over and then the follow through, and you feel that there's going to be some more follow through here. We have a gap back here we could actually test. So there's more downside in our future, but the important thing is we've pulled back enough on some major stocks that certain major stocks won't start pulling back and actually start recovering before the other ones. And these are the stocks we want to actually start to recognize, because these are the stocks you want to actually be in if the market does reverse at any point and start heading back. So this is a good way of actually identifying strong stocks in an overall market, in every market condition. So let's start off a little with this. All right, as you see, here's a actually a chart of last Thursday's S&P 500 chart versus just an average stock here, Alcoa AA, and you could actually see how both the S&P 500 and Alcoa pretty much matching its movements second by second, minute by minute. And this is an example of a stock just pretty much trading with the overall markets. So again, that half your battle is done. If you're picking out which side of the trade you're going to go, you're going to make more money following a trend and trying to trade with the trend than trying to pick up a bottom along the way. So what I usually do, and again, what I think is going to be important for this week, is actually start to establish stocks that might be showing strength other than the pullback in the market. So an example here was Synaptics on Thursday. Even though they came out with some news, you could see around 10:10 to 10:20, Synaptics, or actually to 10:30 here, Synaptics, oh actually the S&P dropped off quite a bit here. And at that point, I was actually watching the stock and just seeing that we didn't really pull back hardly any here. Even when the volume would continue to move up here, but we pulled back just a tiny bit here, just very little, 20 cents versus the market pulling down and aggressive. And you could actually see it in the chart, the difference between this decline and this decline. That's the divergence right there. That's the relative strength you're starting to see. And all of a sudden, because the market just bounced a little, you could see how Synaptics reacted from this and actually made new highs. And this was shown over throughout the course of the day as the as the S&P continued to trade. Synaptics also continued to make new highs every time the S&P pulled back. Synaptics pulled back, but once the bounce came, even though the S&P was not making new highs or changing any trend here, the Synaptics, that each opportunity here was another buying opportunity, another scalping opportunity, another position opportunity. So just giving you so that's what you really want to start to look at each morning, and you can start looking right at the opening bell. I usually give myself 15, 20 minutes to let the market start to shape up and get the whiplashes out of the way. And then I start to, and again, it's also important to have enough stocks on your screen. And that was, I was going to try to get the camera up in the room today, just show you my layout, and I'll follow up with that this week, getting the camera up to show you the layout. But Normally you gotta be having enough real estate to see. We talk about minimum, 3 monitors, 2 monitors. You hate to have two. I mean, why not go for 3 monitors at least? That way you can fill them up with different. Fill them up with your focus list that you're trading. And let me give you an example of that right here. Let's just say we're going to do. Well, I tried to actually show you a screenshot of my screen, but the video portion wasn't working right now. So I'll get to that. But you can actually see other charts on the side here. And again, you have enough stocks. You have your main indicator stock. You could follow the S&P 500. You could follow the SPY, the SPY. You could actually follow the ES minis. And these will all give you a good tracking or a benchmark for the overall markets. And then from there, you want to have all your stocks set up on your screen so you can easily see the patterns, and each one each one in sync with each other, each one working off a certain time period. So with everything, you can actually tell the same period of the stock. That way, you can start seeing the relative strength show up. And when that relative strength shows up, you want to pay attention to the overall market conditions, or actually the market areas. And this is how important knowing how to trade the S&P minis or whatever. You want to be able to trade the markets and know where the bounces are going to happen. So you have to always pay attention to the S&P 500 and where the support lines lie, the moving averages, what kind of patterns are setting up. And when this happens, these are the areas you're going to start taking your position in the relative strength stock. So as each time the S&P pulls away from the trend line and kind of bottoms out here, there's always the spring back motion. I don't have the 20 period moving average here on this, but if it was, it would be running through here. And each time that stock pulls away from that 20, it bounces right back up towards it. All right. So each time it pulls, that real steep pullback in the S&P, and the stochastics continue to hold relative strength, meaning to hold in whatever technicals you're watching on them. That's going to be your entry point right there, knowing you're going to get a nice push back up to the thing. So it's a timing thing. That's just one example, pulling back from the 20. If I saw a wedge pattern here forming like here, I would also use that to get in. If I knew that was a little reversal or bounce pattern on the S&P. If they had the 200 period moving average underneath us here, and we came down to it, I'm just curious to see if it was there or not. I'll put the indicators in on that one. All right, let me do this fast here. I'm using the quote tracker charting system here, so let me just put in the 200 here. I'm using quote tracker, using IQ feed also, and let me put in some pivot points here. And you know what? I'm just going to leave that in. I'm just going to leave that in there like that. All right, so we're way under the 200 period moving average, underneath most of the pivots at this point in the day, and so they're not really coming into effect. You can see the red line up here, but basically what we're looking at this point is the deviation, or the deviation from the 20 period moving average, and taking the position as it spikes away. And sometimes it's a hard thing to do, to buy on weakness like that. But these are on relative strength plays, so most likely you're looking for just a slight bounce in the market to get a nice move in a stock that's showing strength during the day. So again, probably the best time to actually start to see that strength come out is between 9:45 and 10:10, and then that strength should carry out most of the day. And unless something drastic changes, it's a good way of actually finding intraday trades, nice scalp setups, a nice and some nice other technical levels to learn off of. So hope you enjoyed that. I want to get back on to doing some research, and I'll see you in the markets tomorrow.